Resource Watch is brought to you in association with Tebe Investment Corporation.
Welcome to Resource Watch, where we look at the latest news in the resource sector. Today we're focused on iron ore, making up almost 6% of the Earth's crust. This resource is the most plentiful of all the elements and is predominantly used to make steel. I'm Nozi Pumbandra, and thank you for joining us. Let's kick off with a look at the stories making headlines.
Ruschrome, a joint venture company between Zimbabwe and Russia, plans to invest $1.6 billion into developing a platinum mine and constructing a smelter and refinery. Zimbabwe holds the world's second largest known platinum deposits. Multinational oil and gas firm BP plans to invest $15 billion into new Angolan oil fields. It will focus on exploration and development and will span the next 10 years. And Barclays Africa has committed a minimum of $500 million to proposed clean power projects that form part of the Power Africa initiative. This will increase the available power by up to 12,500 megawatts in countries which include Kenya, Tanzania, Nigeria, Ghana, Liberia, and Ethiopia.
Mbazima, thank you so much for joining us today to give us an update on your company and operations there. Now, last we spoke, we touched on the iron ore price, which adversely impacted on your interim earnings. Is that still something that's a concern for you, or are there significant lessons that you learned during that period that you'll pick up on going forward?
Well, it's still a concern. I think it's a concern for everybody in the iron ore industry. Prices are still around the $93 to $95 a ton mark, and that's not a very good price. We would like it to go up. We had been expecting prices to come down. We didn't expect them to come down as quickly as they did, but everybody expects them to come down. So we have to be, well, it's time for us to get used to lower prices. Not as low as 93, but lower prices nevertheless, yes.
It's unfortunate because it is something that you can't really control. And another element to this is the Chinese demand. I mean, Chinese GDP recently coming in at 7.5%, still struggling, but not at the peaks that we anticipated.
Indeed, we have no control over this whatsoever. We are price takers. We take whatever the market tells us what the price is. But as I say, demand keeps going up, especially in China. With the 7.5%, we'll see demand going up perhaps by 3.5% per annum going forward. The problem has been the amount of supply that's been coming on the market. But I think even that is good. The rate of increase of supply will start to come down.
Tough times ahead, but it's also interesting to note that of the recent articles we've seen, you've also managed to strike a 3-year wage agreement with one of the unions at your mines, NUM. But this is significant because it's an increase on salaries of up to 17.5%. That's well above inflation and what the other mining companies are doing. How are you hoping to afford this?
I'm very pleased that we've been able to strike a 3-year agreement with NUM and Solidarity. The increase, however, is about 9% per year for 2 years and 8% for the 3rd year. Now, there are certain people in certain categories where people have moved grades and so forth and so forth. Those are the ones that reach the 17 or 18%, but that's not the average. The average is 9% for the 2 years and 8% for the final year.
It's still a significant number nonetheless.
It is, yes.
How are you going to fund this?
No, I think that will be a very profitable operation. So generally we've been talking about ensuring that our workers can benefit from the level of profit that we make and make sure that they are happy and we are not too sad in the process. I think it's been a very good balance that we've struck between us and the unions.
Now, one is money is one element that comes with this, but what about skills? Are we seeing more transformation being imposed upon some of your workers? Because a lot of people speak very highly of your corporate social responsibility initiatives.
Firstly, our workers are generally slightly higher skilled than the underground mines, let's put it that way, because they're driving trucks and driving certain big machinery in the pit. So generally our level of skills is quite high, and we're very happy about the level of training that we do to make sure people can use their skills. In terms of CSI, we have been quite profitable for the past few years, and therefore we invest in the community. Firstly, we invest through the Community Development Trust, which owns 3% of Kumba. So in this last period, for example, we'll be paying them something like over 200 million rand as a dividend, and they'll use that in the community. In addition, we do our own CSI into the community, and I think last year we spent 250 million rand in the community. But all these are numbers. It's what you actually do with it and what you see in the community. Colomela, for example, will put a lot of money into early childhood development, and when you go there and hold the kids in your, in your arms, and you can see the teachers and you can see the facilities, it's really very good.
I can imagine. But certainly of the other things that must keep you awake at night, Labour is one of them. But what about the legislative environment, in particular in South Africa with the MPRDA?
I see the legislative environment as improving. Okay. Over the last few years, we were talking about the SIMS report and nationalization and changes in the MPRDA, and all these were things that were worrying us and worrying investors. Having been through that debate now, having been through the MPRDA amendment and having engaged with the government and agreed more or less what would happen, and having seen government do that, we are no longer as worried about changes in legislation as we were in the past.
What about on the rest of the continent?
Very interesting. I think that the mining environment on the rest of the continent is changing, and changing positively. Take Gabon, for instance. Gabon was a country which was mostly to do with oil, and now they want to do well in the rest of their mining industry, and they have changed their mining code, and they've put that through parliament, and it's something that we can all work with. So I think the Africa as such is improving in terms of its mining code.
It's interesting you mentioned Gabon, because that's also where you were going to invest in the Mbaga project there. But unfortunately, there has been a divestment from Anglo-American as well as Kumba from that particular operation.
Yes.
What were some of the key issues that led to you guys taking 2 steps back?
I must stress here that the Mbaga project, just like the JV with Jonah Capital in Liberia, were exploration projects. Generally speaking, in the mining industry, exploration is more miss than it is hit. When you hit in exploration, it's very, very good. But more often than not, you can only expect a small portion of your exploration to come out positive. And for us, the Mbaga project did not come out economically positive, and therefore we set that one aside. And next one. I want to emphasize that this isn't about Gabon. This is about the particular project and the economics associated with it.
So let's touch on the rest of the continent, because you say it's not about Gabon, but it surely is about the African story. You yourself are a true African. You're born in Zambia, operating mines in Zambia as well as here in South Africa, and exploring activities across the 54 states that we have. Is the environment changing? Are there particular lessons that you're picking up on where we need more involvement from maybe Western counterparts or maybe fellows from the East?
I think the story has been the same as in South Africa, that you've got to have an environment which is welcoming of mining investment. Mining investment is long term. You sometimes have to put in money into the ground for 7 years before you can see any return. So the investors need to have some certainty about what the environment is going to be like. As I said, you've seen countries like Gabon, you've seen countries like the Republic of Congo, for example, you've seen countries like Sierra Leone putting in place legislation that ensures that when you go into that country, you know what to expect, you know what the government expects. We've also seen countries now starting to become active in their infrastructure. Whereas before you expected the mining company to come and build the rail and to come and build the port, now we're seeing partnerships with government in doing so. So I think we're headed in the right direction in Africa.
Norman, you've also been in the mining fraternity for more than 3 decades. Yes. That's a very long time for one person.
Are you telling people my age?
Not at all, not at all. But maybe we're trying to tell them just how much wisdom you might have, as well as expertise after being in this industry. The lessons, key lessons that you've learned. Maybe give us 3 lessons that you've almost learned in each decade of your experience.
Yeah, the first is that you need to work with government when you're in the mining industry. As I said, it's a long-term thing. It involves the country and it's the people's patrimony and so forth. So you really need to work with government when you're in the mining industry if you are to be successful. That is probably the first lesson. The second lesson is working with employees. The employees have certain aspirations that they want to have, and you need to understand those aspirations and work with them to bring down those aspirations if they are too high, so that the expectations are right, and be able to meet the expectations that you think are appropriate. Finally, I always talk about my stakeholders, and the community is a stakeholder. When you get into a community, it's usually quite a poor community. And it doesn't matter what country you are in, even first world countries, the communities where you sit are usually quite poor compared to the GDP that you raise when you start a mine over there. So again, you got to do the same. You got to work with them, agree what is possible, and deliver on that agreement, but talk to them all the time.
That was CNBC Africa's Gugulethu Mfuphi sitting down with Mbazima from Kumba Iron Ore. Now, have you ever heard of the word numismatics? Well, I certainly haven't, but in our Gem of the Week, we visit a leader in the marketing and manufacture of numismatics in South Africa.
Numismatics is the study or collection of currency, including coins. And the Gold Reef City Mint is one of the 2 privately owned mints in South Africa that have minted legal tender coins. These days, the mint does a lot of corporate work, making medals, badges, and gold and silver bars. Resource Watch visited the mint, where we discovered the allure of silver. In times gone by, silver was mainly used as currency. Today, it has wider applications.
Well, if you look at what it's being used for right now, if you look at the amount of available silver that is available right now, it is grossly down on what was available a couple of years ago. So there is, in essence, right now, worldwide, a critical shortage of silver. And one of the biggest users, as I said, is the solar industry. Just to meet the needs of the solar industry in the next 5 years, we're going to have to mine something like 6 or 7 times the silver that's being mined at the moment. So my personal opinion about silver in the future, it can only go up in price.
So with a high demand and a low price, this precious metal is gaining popularity as an investment.
The investors and the people who are in the know, guys who spend a bit of time on the internet looking and seeing what's happening worldwide, a lot of them are actually selling gold and going into silver. Firstly is sort of the prices you're paying for silver right now, as I said, are ridiculously low. So a lot of people who would normally have invested in gold and have invested in gold are in fact going into silver in a big way.
So if you have a bit of cash to invest, why not buy a bar or 2 of silver?
And that's how we end this week's show. Talk to us on Twitter. That's @Nozipombandra or @CNBC Africa. And don't forget that the show's hashtag is #ResourceWatch. Until next time, it is goodbye for now.